Hello, and welcome to AI Market News by LM. This week, we are looking at a market that is sending out some seriously conflicting signals. It's a real tug of war out there, so let's get right into it.
First, a quick disclaimer. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
All right, so here's what we've got on tap today. First, we'll unpack the market split personality. Then, we're going to dive deep into the huge divide happening in the currency world. After that, we'll get behind the headlines to see what's really driving things. And we'll wrap up by looking at the week ahead.
You know, right now, the global market feels like it's telling two completely different stories. Over on Wall Street, it is pure euphoria. But in other parts of the world, especially in Tokyo, there's this growing sense of anxiety. It's a real contrast.
And to put a number on that feeling, just look at CNN's Fear and Greed Index. It's clocking in at 78. Now that is squarely in extreme greed territory. It just goes to show how incredibly optimistic sentiment is, at least in the US markets.
So that begs the question, where is all this bullishness coming from? Is this a healthy, widespread rally, or is there something else going on just beneath the surface? And this? Well, this is where this story gets really interesting. On paper, the S&P 500 is up a fantastic 18% since the election. But, and this is a huge but, if we take out that small handful of stocks at the center of the AI boom, that gain just shrinks all the way down to 5%. It is a crystal clear sign of just how much this whole market rally is leaning on the AI story. Now, this very concentrated optimism, particularly around AI and big tech, isn't just staying put in the stock market. Oh no, it's spilling over and it's fueling a really powerful rally for the US dollar, which in turn is putting a major squeeze on other currencies all around the globe. And that pressure has created this massive chasm, especially between the US dollar and the Japanese yen. Honestly, this is one of the biggest stories playing out in the foreign exchange markets right now. And the big money is already placing its bets. The input sources we've seen show hedge funds are actively positioning for the yen to keep falling, with a lot of them targeting that 160 level against the dollar before the year's out. So why is this happening? Well, it all boils down to two central banks heading in completely opposite directions. The US Federal Reserve is staying hawkish, meaning they're keeping policy tight to fight off inflation. Meanwhile, the Bank of Japan is firmly dovish, keeping rates super low with no real hints of a hike anytime soon. This gap in policy is basically acting like rocket fuel for the dollar against the yen. And that brings us right back to this key number, 160. This is the level that everyone in the currency markets has their eyes glued to. It's become this huge psychological target that a lot of traders think is not just possible, but maybe even inevitable. Okay, so we know central banks are a huge piece of the puzzle, but what other major forces are at play here? Let's pull back the curtain and look at some of the key drivers shaping the global markets. Really, it comes down to four major themes right now. First, that unstoppable AI boom we've been talking about. Second, the diverging paths of central banks. Third, we are seeing some good news out of Europe as inflation seems to be cooling off. And finally, that constant geopolitical noise between the US and China is always a factor in the background. And that AI boom is showing no signs of slowing down. Just look at this. NVIDIA just signed a massive deal to supply over 250,000 advanced chips for South Korea's national AI project. It's a perfect example of the incredible global scale of this investment wave.
Now, on the geopolitical side of things, we got a little bit of breathing room. At the APEC summit, the US and China agreed to a one-year trade truce. Now, this doesn't solve everything, but it does hit the pause button on new tariffs from the US and some export controls from China. It takes a little bit of uncertainty off the table, at least for now.
Let's hop over to Europe, where the inflation picture is definitely starting to brighten up. The headline inflation number for October dropped to 2.1%. That is so close to the European Central Bank's 2% target. Core inflation is still a bit stubborn, but hey, ECB officials are sounding more optimistic, saying the situation is slightly better. But while things look a bit better in Europe, a big storm cloud is forming over the US. The government shutdown is now dragging into its fifth week. This isn't just slowing down the economy and delaying key data releases, it's also threatening real travel chaos, with tens of thousands of essential aviation workers still on the job but not getting paid.
So with all of that in mind, let's turn our attention to the week ahead and pinpoint exactly what we need to be watching on the economic calendar. First things first, what's the market thinking the Fed will do next? Well, according to the CME's FedWatch tool, the odds are overwhelming. Traders are pricing in a 92% chance that the Fed holds rates right where they are. So a rate cut is definitely not what the market is expecting right now.
And here are the big data points on our radar for this week. Today, we've got the ISM Manufacturing PMI coming out of the US. Then tomorrow, the Reserve Bank of Australia's rate decision is a huge one. And we're going to finish the week with some really important trade data out of China on Friday.
So as we wrap things up, it's pretty clear we're in a market being supercharged by the AI narrative, but also being pulled apart by different central bank policies. And that leaves us with a billion-dollar question. Is all this extreme greed we're seeing on Wall Street actually built on solid ground, or is it just a bubble of wishful thinking? Thanks for watching. Don't forget to like and subscribe.